Hi, and welcome to the Down to Finance podcast by Future Finance Group. We recently hosted our first time investor seminar, bringing together experts from lending, accounting, property, planning, and more. Across the night, there were plenty of sharp insights and real-world guidance, so we're distilling some of the best moments for you here. To wrap up the evening, we held a Q&A panel with all of our speakers and Future Finance Group brokers, covering common first-time investor questions around budgeting, strategy, structuring, market trends, and building the right support team. Without any further ado, here is the panel.
We do have some questions that are really common questions that we find a lot of people do tend to ask. So I'll hand it over to some of our team just to ask a couple of those questions just to get the ball rolling while everyone gets a bit more comfortable.
What's a common mistake beginners make when choosing a property, and how can they avoid it?
Oh, great question. So a common mistake that investors make is investing in property is kind of like a business. So it's really important to have a cash management or budget in place, get yourself into the best position to get bank finance, really understand what your goals are so that you can structure it correctly and achieve all the things you need to achieve, and have a team of experts around you to give you the advice you need. Like we've heard from all the panel tonight, experts in each field can give you customised advice combined to keep you on track for your goals. So my recommendation is, have a team of experts around you.
I'll ask you another question while I'm here. How do you balance choosing a property for rental yield versus capital growth?
Yeah, again, depending on strategy. Ricky mentioned just now, wherever Ricky's gone, as you earlier in the piece, it's all about capital growth, because then you are building wealth so that you've got more choices in the future. But as you get closer to retirement, it's more about cash flow. So depending on where you are in your investment journey, capital growth should be paramount in the first years, and then moving it into cash flow to replace your income.
When you first start helping a client with their investments, what's the one lesson that first-time investors can learn?
Yeah, I think so. First time, it's really important to have that overall financial plan. I think a lot of people go into investment without knowing what they're actually trying to achieve in the first place. But if you overall know what your goals are, what age you want to be able to retire, what sort of income that you need, then every decision that you make come back to that overall financial plan. So I think ultimately having a good conversation about what the overall goal is really, really important.
Right, next one. How can a financial planner help investors feel confident taking their first steps?
Probably comes back to building that financial plan. So I think for myself, I've now spoken upwards of maybe 3,000 individuals and families, and anyone on this panel would have seen so many different circumstances, and it's hard to sort of, if you've just gone through it a few times, that's when a lot of the mistakes happen. But you sort of get a sixth sense if you see lots and lots of different situations. So by using a professional that's seen the circumstance so many times, it will generally have a really good experience to be able to, let you know of the pitfalls, and ultimately to sort of be on the right pathway without making mistakes as well.
Mine's for Ash. How do market trends affect first-time investors, and what's a simple way to stay informed?
God, I mean, the first thing that comes to mind when I think market trends, like just as a local example, is one, trust your intuition, because like we're all local, and I think a good example is Frankston North, and it's been highly prioritised by interstate buyers agents. So the marketplace has shot through the roof, and in some instances it's outperformed Coringal, Lakewood. It just almost doesn't make sense. And anyone like local, if you're thinking just really practically, which sometimes I think is the best way to be, in that like there's a place for experts, but then there's also a place for your own intuition. And it's like, that's probably not going to be somewhere any of our family are going to prioritise as a purchase. So my belief is that in 6 years, when everyone exits the marketplace, the only people left that are going to be looking at that sort of marketplace will be locals, and locals aren't going to prioritize it. So I just feel like it's quite predictable. So not to get too caught up in what everyone else is doing, focus on your own intuition. If you walk into a house and it's dark and it doesn't quite work, well, a family's probably not going to prioritize that either, which is going to mean it's not an A-grade property long term. So trust yourself first and, use the experts, to influence you a little bit, but don't let that be everything.
So, in terms of what's one golden rule when looking at buying an investment property that you would suggest?
Be smart with what you're looking to buy. So be strategic. Utilize someone like myself. So I can start the journey well before you buy. And I've done this hundreds of times, whether it's with buyer's agents or just people looking to buy themselves an investment property. Give me a call, send me a link to a property, and I'll be able to give you some advice on kind of what to look for and what not to look for. It does go a long way, and I've had a lot of people go, maybe that's not for me based on the advice that I've given. So utilize the professionals, and someone like me, it's free. So give me a call and we can definitely help.
What's the most important thing someone should do before applying for their first investment loan?
Give me a call. Get pre-approved. So go engage with the broker, work out your borrowing capacity, and then we can link in, if you're using a buyer's advocate, financial planner, accountant, and sort of bring it all together. But see a broker, get pre-approved, and then you know exactly where you're at.
Cool. And can you share a story of a client who took the leap into investing and how the right finance strategy made it easier?
Probably not a specific scenario, but you've got to engage when you're investing with the experts, and they'll set it up exactly right for you, because someone who's PAYG, they might have a slightly different structure compared to someone who's self-employed already with a trust or proprietary limited. So it's just important to engage with the experts early, because once it's all property settled, very, very hard to unravel. So just always engage with the experts early.
If you could give one golden rule about property depreciation to beginners, what would that be?
You're going to get a lot more depreciation deductions from a newer house than you are from an older house. That being said, if you want to get an older house because of the location, still look at the depreciation deductions that you're going to get from that particular property.
Thanks for joining us on the Down to Finance podcast. If you enjoyed this episode, follow along on socials and hit subscribe so you're always up to date. Just remember, nothing you hear here is personal advice. Everyone's circumstances are different, so have a chat with your broker or financial advisor before making any moves. And if you're unsure where to start, Future Finance Group is here to help you map out the right path. Catch you on the next episode. Thanks so much for listening.